What's up, everyone? My name is Jag, and I'm just another guy trading. And today I have a trade recap for Friday, March 18th, 2023. And I only have one trade to go over today, and we're going to talk about it. It's been a rough trading week for me. There was a lot of opportunity, and sometimes when you have you have a situation where you have a nice plan set up, and you feel like you're prepared, and then it doesn't work out, it can be very mentally taxing. At least that's how I was feeling this week. Excuse me. So for this week, the 200 moving average on SPY was giving me all kinds of fits, which it shouldn't have, because there was some clean setups off that 200 moving average. It started on the previous Friday, pre-market. It rejected the moving average, came up during that Friday, rejected it again, and that was the most clean one. That's the one I should have been all over, but I wasn't. I didn't happen to be at my setup for it. So once I missed that one, I wanted to slam it every time, and it kept faking me out because the other 3 times that it retested it, it was not as clean. So I had that all kind of weighing on me going into this Friday. I was up on the week, not a huge week, but I was definitely green. And I was looking, basically, if I'm being honest with myself, I was looking for a quick banger. It was quad witching, and I was telling myself before the open to not trade the open, to wait for an intraday setup, because even though it's quad witching, everybody thinks that levels and supply and demand aren't respected as much. I would say at the beginning and the end of the day, that might be true. Market makers, especially at the end of the day, are trying to pin a price at a certain spot so that they can make as many options as they can expire worthless. But during the day, I don't know. I think it's kind of normal, especially with the volume. It's kind of good. I kind of thrive sometimes when it's ranging in between supply and demand. I don't know. Anyway, I didn't stick to that plan because almost all the other traders around the trading community that I saw talking on social media that morning were kind of having the bias of, let's get in and out of the market. Let's get in, have a nice quick trade for green, and then let quad witching play out the way it's going to. So I adopted that mindset, and it really came back to bite me. So let's get into the trade that I took. It was a trade on QQQ, which is right here. There was a bunch of setups that I was watching, and I could have scalped several different names. But I chose QQQ because if all tech was going to be strong, then you expect QQQ to be strong. And I was looking at it over this 308. You had this candle right here, got rejected off 308, and that should have maybe been a clue that maybe that level was, not as strong. But when you have a bias expecting it to break after a nice uptrend here, you kind of figure it could push through that 308 and continue on. So we had it tested here, rejected, came back up, broke through nice with volume, closed here. I took the retest right there on that candle to go long. Good entry. So far so good. I'm really liking it. I was so zoomed in to this chart at the time, I was trying to watch other names as well. And that really bit me because the chart just wasn't as clear. It wasn't showing me things as clear. And of all the times, I was trying not to pay attention to my P&L and my percentage. I scaled in with 2 contracts. This was one of the most expensive trades that I've taken all month. In fact, it might be the most expensive trade that I've taken all month. With 2 contracts, 0 DTE in the money. And again, why are you trading 0 DTE? I have nothing against 0 DTE if you're a good trader. But look, man, it's Friday, quad witching. You're trading QQQ. You could have taken Monday expirations. If you're trading NVIDIA or AMD, I understand. Because you'd have to buy next Friday's contracts. Those are going to be really expensive. You want to get a quick scalp, 0 DTs are the way to go. But this is QQQ. They have expirations, 3-day expirations. So I could have picked a better contract, and I wasn't watching my P&L this time, which I think I should have been, because it would have given me a little bit better clue on what was going on. So my stop loss was basically back below 308. And we got that close back below 308. And there was a lot of other things that were strong that I was watching. And it kind of took my eyes off of QQQ for a minute. I waited. I saw this wick back up here. And I was about, on 0 DTEs, even though it was almost where I entered, I was about 8-10% down right here on this wick, on that red wick right there. And I'm thinking, okay, this is going to push back up because, the candle opened here, pushed up into here, and I'm thinking, all right, it's going to come back. Just give it a second. Like, don't bail out on your trade too early. This is something you've done all week. You've bailed out too early. And then we got this nice flush. Obviously, once I saw that flush, I'm looking for an exit. At VWAP, I was about 30% down with a volatility pump. And I clicked market sell. And I had that very scary moment where you don't hear any confirmation sound. And you see the price bounce, 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 and then fill. And it filled for a 40% loss. And, it could have been worse. It's not like it bounced back and I can, have fear of missing out. No, I would have lost a lot more. But I should have cut it. Should have cut it way sooner. I should have cut it right there. This is one of those trades where you cut it on this candle, breaks and holds above, take it then because it's probably going to do the same thing as this. It's probably going to retest the level again, and then you can get in to go long and go about your business. And that's what I usually do. Didn't do it today. I took the worst loss that I've taken all month and pretty much in the past 2 months. 40% drawdown on my most expensive trade. So that was a tough pill to swallow. And it took me out of the opportunity flow. I didn't trade anything else for the rest of the day. There was one other trade that I really, 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 really wanted to take that I was kind of prepared for. But mentally, I couldn't hack it. After this trade, it made me flirt with being red on the week. So I didn't want to lose any more money. That's it. So let me show you the other trade that I would have taken, which would have been on SPY/ES. Let's go to ES because I think it's a little bit cleaner there. Okay, this was... so this was Friday. Actually, I think it was SPX. No, not PX. SPX. I think SPX had... Yeah. Here we go. So you can see my fibs. Oh, my God. And the thing is I wasn't even looking at this chart. I was looking at the SPY chart. And a quick note, when you're watching the S&P 500, you do have to pay attention to SPX. You have to pay attention to ES, and you have to pay attention to SPY. On any given day, one of those charts is going to be cleaner than the others. You kind of have to know which chart to be watching on what day. You got to watch them all, honestly. But when I'm looking to make a trade, I'm zoomed in on either ES, SPY, or SPX. This day, I was zoomed in on SPY. And as you can see, I had this charted for SPX. Once we created, let's see, I made this from this swing low to here. So you can tell that this Fibonacci level, this 0.5 fib level, lines up almost perfectly with the 3900. 3900 is a key level on SPX. It has been a key level on SPX right there. So that's where the 0.5 fib retracement lined up. Hello. Now, it's one thing to say to take a bounce off that with this type of price action. Yeah, it's challenging to take a bounce off that. You got to really read the tape. You can see things were slowing down into this zone. But is this a bear flag? I mean, this looks like a nice bear flag to me, right? But it's kind of both. The price action was slowing down and it was a bear flag because you got continuation. But you got continuation right into that 3900 level. So this is not the bounce that I was looking to take. This is 100% the bounce I was looking to take. Now with quad witching, I don't have a ton of experience, but I haven't seen a quad witching day yet that's just trending one way and doesn't look back. It's always back and forth ranging. And that should have been my clue, that once this pops up here, it's coming back down to retest that. You can see how well respected VWAP. No, you're not getting over VWAP today. Nobody wants you over VWAP today. So when it came down here and wicked low after the same thing, right? Same exact price action on a smaller scale. Comes down, bear flags, small continuation, and then bounce. Come on, man. That is so beautiful. So beautiful. This is where I wanted it. Profit target would have been up here. Leave runners to VWAP. Nah, man. Wasn't even ready for it. So I missed out. Let me go look at and let's see what my SPY chart looks like to see what I was looking at. Yeah, so I was waiting, it didn't quite get, I had demand drawn on SPY down here, and it didn't quite get there. But the 388.5 level, this is a level we had plotted on our charts. At least I did on a lot of my other charts, because that's 3,900 on SPX right there. Pow. Very, very clean. And then this 390. This is what I call a bias level. If we're above it, you can be bullish. If you're below it, you're bearish. This is sort of my bias level. Came up. You can see it hung on to that most of the day, and still trading in that range right now, post market. So anyway, those are the trades I took. That's where my head was at. Yeah, you can see even Friday, it got yet another 200 moving average rejection. Now this one's a little bit more tricky, but nonetheless, it's quad witching, you're watching other things, comes down through the zone. Once it breaks this zone again, it's valid for a retest. This is not a very clean retest. You can see there's a lot of volatility in these candles, but it is what it is. I mean, once it was broken, look what happened. Broke. Look how clean. Look at how clean that is retested right there. With VWAP and Confluence, take puts here with a target to here. There's your trade. Where's your stop loss? Well, if it breaks and holds over this line, stop out. Super risk reward. Come on, man. And this is the mental part of the game. As you can see, like my charts are on point. Like my levels are good. I just need to start trusting them better and execute trades on them. You get into a lot. You have a loss for the day. That doesn't mean you're done trading. Yes, you shouldn't overtrade. Yes, you shouldn't revenge trade. But when a high probability setup like this 3,900 bounce on SPX comes about, you have to take it. If you don't take those trades, then your whole system gets skewed. Your probability factors get skewed, right? So anyway, that's what I'm learning. It was a rough week after having a really awesome month. February was a great month. I took a lot of clean trades, stayed out of my head. And the beginning of March was a really good month. And then this week, I put too much emphasis on that 200 moving average. I wanted it too many times. I got about 5 rejection opportunities, and I didn't really capitalize on any of them. So that was a gut punch, honestly. Like that, even though I didn't lose money, I didn't execute it, and that's a loss. So I'm going to go back to the drawing board psychologically and try to start this week off with a fresh mindset. One thing that I'm going to do personally is not think about my all-time P&L. Like, oh, I'm so close to becoming break even all time, or I'm this far down all time, or I've got this much money to recoup in this account. No, all that is out the window. I'm looking at my setups, I'm looking at my charts, and I'm executing. And hey, it's the weekend right now. That was Friday, March 17th, so I'm going to go on record and say that, and then I'm going to go back and watch this video, and I'll be able to know if I executed or not. All right, guys? So that's my trade recap, and my name is Jag. I'll see you on the next one. Peace.